Senior analyst Garrett Nelson. Stock has sold off really into this report. Garrett, is this an opportunity? You like this stock?
We do think it's an opportunity. Tesla shares are down close to 30% over the last month after a big run up. And, we really wouldn't bet against Tesla. Their earnings track record has been outstanding over the last few years. In fact, they've beat in 11 of the past 12 quarters. I think what's different this time is we think there's a reasonable chance that Tesla is going to announce a stock buyback. Some major investors have been urging Elon Musk to do so. And the company's balance sheet is in really good shape. They had about $19 billion of cash at the end of June. Their credit rating was recently upgraded to investment grade. And so we think they're in position to really take advantage of this pullback in the stock. We think there could be a fairly sizable repurchase plan announced in tandem with earnings.
Which you think is not factored in and would push up the stock?
That's right. But even absent that, we view Tesla as one of the market's best earnings growth stories at a time when earnings are being broadly impacted by inflation and slowing consumer spending. This is a company, if you take a 3-year view, we see Tesla's earnings per share roughly tripling between 2021 and 2024. They were the auto industry's biggest winner from the Inflation Reduction Act law that was signed in August. And then they have some near-term catalysts. The semi-truck first deliveries are expected in December, followed by the Cybertruck next year. And we know they continue to ramp up their 2 new factories in Austin and Berlin. And they recently completed an upgrade, a capacity expansion of the factory in Shanghai.
Wait, Garrett, you're talking about all the good things for Tesla, and clearly that's the bull case, but there's the supply chain issues, there's the China demand issues, geopolitical concerns there, and the Shanghai factory. There's the fact that he's going to buy Twitter now and some of the concerns around distraction and potential share sales. So that's the other side of the coin. You think that that's overdone?
We really view these concerns as priced in, given the decline in the stock over the past month. As far as Twitter, if you look at the amount of stock he's sold in the past year, we think he has the cash, in order to close that transaction. It's just a matter of whether his investor group remains together and whether or not he's been able to find additional investors or get additional commitments. But we could see a scenario where potentially he doesn't have to sell any more Tesla stock in order to close that.
Garrett, thank you for joining us.